Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a positive start thanks to improved risk appetite across the globe. Nifty right now is suggesting of a muted to a positive start coming in for Indian equity markets. Resistance around that 19,200 to 19,250 mark needs to be seen. If we can scale past that 19,200 level, US tech stocks overnight ended higher with investors betting on the Federal Reserve doing past their rate hikes, at least for this year. At least talk about the Dow Jones. It's jumped by more than 550 points and clocked in the best day since June as the bond yields receded. Talk about Asian equities. They're set for the strongest week of 2023 on interest rate cheer. Let's talk about FII. Well, there is no solace coming in for that one. They've offloaded shares to an amount of around 1,261 crore, and DIIs have bought equities to an extent of 1,380 odd crore. Let's also talk about FII data in F&O space. How is the trend tracking up there? Where they've been buyers or seller? Well, they have been sellers in Bank Nifty futures and Bank Nifty options. They've also been sellers in Nifty index futures and options. Only place where they are buyers is stock futures. Talk about F&O ban. GNFC still remains in the ban. Talk about Nifty PCR indicator. That is at 1.01 versus 0.82. Earnings that need to be watched out for will include Titan Company, Interglobe Aviation, Zomato, Aditya Birla Capital, along with Bharat Dynamics and Crompton Greaves essentially, which will be reporting in their numbers, along with JSW Infra, Indigo Paints. There are going to be some of them which will be delivering in the September quarter earnings. Well, let's also discuss the trade setup, strategies for the day, and the top recommendation from Jay Thakkar, who heads alternate research capital market strategy at Sharekhan by BNP. Morning there, and thank you so much for taking out the time to join us. Your strategy A on the markets, do you think it's going to be an extension of sorts for the Nifty? Do you think we can scale past that 19,200 mark? Your strategy on Nifty and Bank Nifty.
Hi, very good morning to you, Nickey. And as far as the Indian markets are concerned, since last Friday, Friday's trading session, and today it's again a Friday, so it's going to be a week. Also, that we'll be having this positive weekly close on the index. We saw Nifty touching almost 18,850 last week. And from there, we are seeing this bounce back. Now, this bounce back is of a corrective nature. By that, I would say, Nickey, that there is a corrective move on the upside. That's not an impulsive move where you can see a clear bottoming out process. So, by corrective move, I would say it's a bounce back. It's a technical bounce. It's a technical bounce. And not yet, it's a cross into when markets are still a bit oversold. Until last week and until Federal Reserve statement, they were quite oversold. And since the outcome out there was positive, we saw that bounce back coming in the US markets, and of which the Asian markets have also benefited as well from this bounce back. So 19,500 is the max, is what I see as of now. 550 in this bounce entirely, and 44,000 max on the Bank Nifty. So today's going to be gap up. It can stretch even more. I mean, we're seeing 19,050 already. It can stretch until 19,000, 300, 350, and maybe eventually 19,500. But not beyond that is what I see. And Bank Nifty has some resistance. So in this kind of a market, you should not jump and buy. You should wait for the opportunity, buy or dip, sell or buy. That's how it has to be. And 19,000 now is the immediate support. The 19,000 levels are ahead of 50. Until 42,500 levels on Bank Nifty ahead. The short-term trend, is definitely
Jay?
the bulls.
Jay, can you hear me? I'm just going to interrupt you shortly. Your audio is not really clear, so we're going to come back to you in just a jiffy. In the meanwhile, we'll just address in stocks and news so that we can hear you better. Well, let's talk about Tata Motors, where the numbers have been reported, and of course, it's going to be the big earning of the day, which is also expected to be the stock of the day. Well, net profitability is coming at 3,764 crore for this one versus a loss of around 945 crore. The revenue is up by 32% for this one. EBITDA has come in at 13,767 crore versus a number of 5,571 crore. So you can see the jump, let's just say the expansion coming in on the EBITDA numbers. forex gains of nearly 93 crore versus a loss number of 624 crore. If we talk about JLR, that's an important unit that you need to watch out for. Revenue is up by 30% for that one, and the margins have come in at 15% as compared to nearly 11% in the corresponding quarter of the previous year. So essentially, it is the one that you need to watch out for. Now, Tata Motors in its statement has said that it remains optimistic on the demand despite external challenges. It anticipates a moderate inflationary environment and aims to deliver a strong second half on the back of healthy order book seen by JLR. And overall, if you see, most of the brokerages have maintained their buy rating on Tata Motors, and they've suggested that it is strong business momentum which continues in the quarter gone by. What essentially really needs to be watched out for, the raised guidance on JLR margins. That is incrementally positive coming in for this one. The commercial vehicle business also, there is a margin beat seen in this quarter. And the passenger vehicle business, well, the EV has dragged down the margins a bit for that one. The catalyst includes an increase in production levels for JLR in the second half of the financial year, and the market share gains in the domestic passenger vehicle in FY25 put together. What I also want to talk about is IEX, but we're going to be addressing in the markets open in just a jiffy. Well, yet another good number. Revenue is up by 14% for IEX. EBITDA has also shot up by 16%. And in effect to which the bottom line performance is also improved by as much as 21% for IEX. So do keep an eye out on this one. JK Lakshmi has reported in good set of numbers. The Q2 profit has spiked in by 55% on the back of higher volume, better products and sale mix, along with reduction in fuel costs. These are the three earnings that you need to keep an eye out on. We're also going to be talking about this in detail, but let's address the market open. Well, it is a start, and it is a good start coming in for the markets. 0.5% gains coming in for Nifty 50 right now. 19,000, it's flirting around that 19,250 level. Hurdle past, it remains to be seen if it can cross that 19,250 level, which seems to be a bit of resistance level for the markets right now. Let's talk about Bank Nifty just to see how the trend has been stacking up for the markets. 0.5% of gains coming in for Bank Nifty index, and we are also looking at 43,250, a little level below that. I mean, it's just nearing to that level thereabouts. Mid cap index and the small cap index also seems to be faring well for the market. It is a good start coming in. For mid cap index, it is gains to an extent of 0.6% out there. And for small cap index also, 0.75% of gains clocked in for that one. A bit of outperformance coming in. It is a good start. Like we anticipated, global risk appetite has gone up after the Federal Reserve had decided to pause on the rates. IT index seems to be doing well. Let's look at Tata Motors, how is that doing well, and then move on to top gainers and top losers, essentially just to see how the trend has been stacking up. Well, it is a good start coming in even for Tata Motors. Like we anticipated, it is the stock of the day. Let's pull up the top gainers and the top losers before we again go back to the discussions out there. It is a Friday special segment. Tata Motors, Apollo Hospital and Hero MotoCorp. Well, essentially the auto names have featured into the list along with Infosys, L&T and M&M. So the theme of the day clearly remains auto stocks. Let's talk about the top losers. Advances 42, declines 8. Clearly, the market breadth right now is in the favor of advances, NTPC, Tata Steel and ONGC. These are some of the top losers that we have. Let's go back to Jay and check with him. What does he make out of the current start of the market? 19,200, way above that level. Jay, what do you make out of it? Jay? All right, we're trying and go ahead. Can you hear us, Jay? All right, we're trying to get a hang of the audio issues with him. Meanwhile, I'll also want to address in Gujarat Gas numbers, good set of numbers coming in for Gujarat Gas, where we are looking at revenue, which is up by as much as 1.7%, and EBITDA, which is shot up by 28%. The margins have also inched in higher for this one. Gujarat Gas is clearly that you need to watch out for. But let's try and fix the audio issues with Jay just to see how is, if we can get a recommendation from him. Jay, are you there?
Yeah, Nickey. So, as your queries on Gujarat Gas, is it?
Nifty is at about that 19,200 mark. A bit of resistance perhaps could be, you think, witness around that 19,250 mark. What's your strategy there?
Absolutely. I think that Nikkei, it can inch towards 19,300 on the upside. 19,200 was a very clear resistance and was a very stiff resistance. Now, since those levels are taken off, I think until 19,200 levels now are held, at least for today, 19,300, 325 levels can be seen on the upside.
Also, Tata Motors is something that I'd like to discuss. Jay, what do you think of it, and your top two recommendation before we, navigate our conversation more towards the fundamental side?
Tata Motors, Vicky, I would say that Tata Motors is trading in an upward sloping channel, and the upper end of the channel comes to the levels of almost 680. There is where we see a very clear resistance on Tata Motors, and in fact, the momentum on the weekly charts is it's in a sell mode. It's quite weak, and I think that the upside is capped until 680. So major breakout on Tata Motors can only be seen about 680, else it's likely to consolidate within this range of say 620 to 680.
All right. Also, I'd like to understand your assessment on the IT stocks, LTI, Mindtree, Infosys, Tech Mahindra. So it is a bunch of auto names along with IT names essentially, which are the theme of the day. What do you pick out of LTI, Mindtree, Infosys and Tech Mahindra, the charts of which stock essentially looks good at this point of time?
Well, all of these IT names, Nikki, I would say are quite oversold. Maybe Infosys or maybe TCS. So there can be a good technical or bounce back or a retracement of the entire fall. Overall, if I see the Nifty IT index, that itself can bounce back to the levels of say 31,200, 31,500 levels. But then overall, if you see on the monthly charts, the momentum out here has weakened. The trend is negative for all of these stocks. Barring few IT names, maybe Birla Soft or maybe Persistent System. These are these few mid-cap names like Sonata Software, Sand. These are stocks which are trending high. They are trading the lifetime highs. Those stocks may outperform the overall IT index. But the large cap names, talk about maybe Infosys or TCS or Wipro, and all of them are looking weak, and the outlook there for them is negative. HAL2 from the defense side, I would say, is looking somewhat positive. There can be some bounce back, but overall trend has turned negative.
All right, Jay, we are going to leave it at that. And thank you for taking out the time and speaking to us.
Thank you.
All right, let's navigate our discussion now towards the fundamental side of the story. Enough ground needs to be covered, whether FIIs can come back in a big way after the interest rate pause that has come in for the second consecutive meeting. Apart from that, we'd also want to know about a few sectors which are apparently going to be doing well in the run-up to Diwali. But to take the discussion forward, we're being joined by Vinit Sambre, who heads Equities for DSP Mutual Fund. Well, morning there, and thank you for taking out the time to join us. Well,
thank you.
All right, pleasure. I'm going to start off with asking you about, you think US Federal Reserve's continued interest rate pause will reverse the correction seen, perhaps it has already reversed the correction seen in the last week. Do you think that can prompt in the return of FIIs who've been sellers over the past 3 months to Indian capital markets?
Yeah, good morning, and thank you for having me on the show. So I think principally the way to sort of think about the overall market's likely direction and also how the FIs have been thinking. So I think one structural view, when we talk to some of these international investors, is that there is a very strong positive outlook for the India's long-term growth story coming out clearly from how the government has been implementing the reforms, and that has actually led to a lot of better visibility of growth across some of these core investment segments of the economy. And to participate in that, I think, what we are talking about is, I think, a multi-year kind of growth outlook. And hence, basically, it becomes imperative to consider on a relative scale, when we look at the global economies, there will be very few who can showcase this kind of high growth. So I think from that structural viewpoint, it is definitely going to be imperative for the foreign investors as well to sort of think about participating through the equities market. But on the short-term basis, I think you will keep having these volatilities around the risk on, risk off, the valuations, oil prices, which actually hurts the sentiment as well for the international investors. So from that perspective, to sort of sum up, I think we have seen some bit of these recent outflows, which is linked to the geopolitical issues, the oil price, risk of oil price actually going up, the valuations which we are seeing right now, especially in the small and mid cap space. Maybe once we have some bit of consolidation, time correction, that will give them enough incentives to sort of again participate, because the long-term story sort of for India looks pretty good.
Yeah, that's clearly the sentiment. But what really is the question that I wanted to ask is, A, what do you think FIIs with this, can they come back in a big way? Because they've been sellers in the market thus far.
So I think one cannot even classify these FIs into one bucket. You have different types of investors. There are passive investors, there are long only investors. So what we believe is, and it is very difficult to predict the short-term moves is what I can say. But let me tell you, I think the interest is there, and I would believe that maybe at some level of market decent valuations, they may want to pour in more money, is my sense from understanding their viewpoint as of now.
Sure. Your perspective overall on what's the strategy that you think investors could be deploying in, not really a long-term view as we'd like to look at it, but a little more shorter-term view, because we're looking at the market which is right now very dynamic with the geopolitical concerns and the oil prices being a bit of worry, the days being a little volatile. Do you think it's a buy on dips market or sell on rise market?
So I think clearly first, if we the markets, when we look at the large cap as a category, one will realize that, let's say, of the top 10 large companies, maybe 50-60% of those companies have not participated meaningfully in the last 2 years of how we think about the Indian market's optimism. So in a way, there is decent amount of comfort around valuations for, let's say, the large cap segment as of now. And when we think of the mid and small cap, I think both the categories now are trading at almost between 7 to 10% premiums to their 10-year average valuations. And we have seen a very smart rally happening in the small and mid cap space, which is continuing in bits and pieces. But I would say that the small and mid cap in general has slightly become expensive as compared to their long-term averages. So from the really short-term perspective, it makes sense to have maybe slightly more allocation towards the large cap, because the valuations there are slightly more reasonable. And within the mid and small caps, I would sort of go with what you mentioned, that buy on dips, because as I said, one would like to participate in this growth opportunity. And when we talk of buy on dips, I think we have still not seen meaningful correction in terms of when we look at valuations in some spaces. But as and when stocks specific in relation to their industry and in relation to their own long-term averages, if they come off and become more reasonable, I think it is a good strategy to keep looking at buying on dips. And as long only money managers managing equity for long, in general, our biasness is towards equity, so that also maybe flows through in our views.
Sure. Vinit, a historical analysis of the past 5 general elections essentially showed that the Nifty 50 moved higher at least 6 months ahead of leading to the polls on all occasions in the last 5 times that we've picked up data. Average is around 21% thereabouts. What's your expectation this time around ahead of the election? At least let's just say 6 months ahead of the election. What kind of strategy do you think are you suggesting to the investors out there?
See, again, surely, I mean, this time around, I think election also plays an important role, because, we have seen that there definitely has been a very positive response from the government since COVID in terms of how they have been focusing on spending. And I think that has helped the economy, because if you look at the consumption side of the economy, clearly you might be getting views also that, the bottom end of the pyramid is still struggling, the rural side of the market is still struggling. So I think that is a bit of a concern as of now, and maybe we are not trying to guess, but I believe that just like any other elections, before the election, some amount of spending leads to that consumer as a basket doing well, and that is the reason why. And the general expectation that election will lead to more optimism around spending, which we should continue. So I think those are the reasons why the elections generally have been considered as a good let's say precursor to the rally. But I would say that this time around, unless and until we see the consumption trend actually improving, and maybe already in terms of spends, we are already having good spends, but before election, if they were to some sort of slow, there could be some amount of risk. And anyways, people may want to, and anyways, in terms of valuations, we are on the high side. So I think that let's not take the trend of the previous histories and work on that. Maybe look at the data points right now. And if you believe that some amount of this consumption spend start to improve, the rural side, the lower end of the pyramid starts to improve. I mean, that's the point where one can take a positive stance on the markets.
Right, point well taken. Let's also talk about your strategy. Essentially, how could one look at playing the Indian equity markets ahead of Diwali Muhurat trading session? Now, again, few historical data, and probably you'll preempt me by saying that this is a little different way of looking at it, but just going to say that anyway. A study conducted by one of the brokerages suggests that the Nifty has showed a positive gain 9 out of at least 10 occasions during the period between Navratri and Diwali Muhurat trading over the past 1 decade or so. That's like a long historical data that we've pointed out. On an average, benchmarks have come in higher by 2.5% sort of returns. What kind of view, what kind of sectors do you think could be the themes which could be in the favor ahead of the run-up to Diwali Muhurat trading session?
So rather, I would suggest and assume that, let's say, if investors is really looking at this Diwali from the equities viewpoint, I would urge them to sort of think of maybe investing into some segments which I will talk about this Diwali, and maybe sort of try to hold on till the next Diwali, because there are good data points which we believe in some of the sectors which I'm going to talk about, where we see the data changing. The segments have been, have been neglected for some time because of the current slowdown which they are seeing. And maybe through the next 1 year, maybe they see some bit of improvement. So I think clearly for us, one of the segments has been the pharmaceutical sector, which we as a house, we have been overweight because given the fact that they have underperformed for the last 2 years. There were multiple problems which the sector was plagued with, but I think gradually some of those problems are sort of waning away, and that gives us confidence. And when I say problems, I am talking about the US pricing, the approvals from the US as a country for the Indian companies. The overall raw material and the other costs which have started moderating, which is helping the profitability. So I think that's one segment which I believe has been neglected, has been underperforming, and could do well over the course of next 1 year, and hence looks good from that investment standpoint. The other segment is maybe the building material as a category, which we are witnessing very strong momentum as far as the real estate market is concerned, but we have not seen equal amount of improvement right now as far as the demand for a few of these building materials like tiles maybe is concerned. So I think those could be one of the categories where the demand could flow through, as we are seeing the real estate momentum actually continuing. So that can be a good space to be. The other segment would be the NBFCs within the broader banking space. We like the banking as well, but at the moment, I think the NBFCs will clearly see the benefit of interest rate coming off, and the cost of deposit for them should see some moderation as we see interest rate coming down eventually over the course of next 1 year. And I think that as a segment should see benefits of decent growth and margin expansion. And as a contra play, I would say that we have seen a decent amount of subdued type of an environment, as far as the rural side of the economy is concerned. There are a lot of agri-based companies which are leaders in their own categories, and we like them for their good management and capital efficiency. So I think those could also turn out to be maybe a decent investment over the course of next 1 year. So I would sort of try and summarize that these are the segments which one can sort of focus on, try to accumulate stocks in these segments during this Diwali.
All right. The last question, perhaps, since you have spoken about financial services, are you also looking at Small Finance Bank, ESAP Small Finance Bank, which opens for subscription today? Have you got the chance to read into it?
So, I see, without getting into the names, we have a very select exposure in the small finance banks, and I think it's not about them as a category, but I think more important is what we try and focus on is definitely how these banks are looking at opportunities for growth. Beyond that, I think it is very important how these banks they have built their underwriting standards, because right now the environment is pretty positive and the asset quality looks pretty good. But once if there are changes in the environment and it leads to some bit of risk on the asset quality, one has to be very clear about the banks which can sustain those and still produce good ROAs. So I think our selection process has focused on decent ROAs, strong underwriting standards, and decent growth. So I think that's the matrix which we have followed.
All right, Vinit, we're going to leave it at that. And thank you for taking out the time to join us on Friday's opening blip. All right.
You all a very happy Diwali.
Wish you the same. All right, let's also talk about ESAP Small Finance Bank, which is set to launch in the IPO on November 3rd. It's planned to raise around 463 crore. Out of that, fresh issue would be to an extent of 390 crore, and the remainder part will come in through OFS. The price band has been fixed at 57 to 60 per share. The company has already raised in 135 crore from the anchor investor. But that's that. When it comes to this edition for the markets, it is a good start, and we've covered in quite a lot of ground with regards to how we could look at the markets and also the Diwali picks. But with this, it's a wrap. And goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.